Welcome to Convolution Corporate Connect. My name is Jagannath Thakur and I am the co-founder of KRC. Today we are going to study about the payment technology fundamentals. So let us get started. First thing is, what is payment and how technology has enabled payment to make it faster and more convenient for the payer and the payee. And in between, there are banks and the government which has the rules to govern those payments. So we have seen about digital payments like credit card, debit cards, UPI, but when we separate them into what are the different types, so there can be a closed loop payment or an open loop payment. So closed loop is between the payer and the payee directly, like somebody directly paying to me. But when it is an open loop, so we can have like anybody can pay to, like from if I have a credit card from HDFC Bank and I go to a merchant, say Pantaloons, and they are using a POS device which has been given by ICICI Bank. So still I can make my payment from a HDFC Bank to the ICICI Bank, and in between there is a network which actually facilitates the payment. So it has emerged slowly that the card acceptance has increased. Uh, like we have all heard about Visa, Mastercard, and whenever we go to a merchant, on the door we see the logos that these cards are accepted. So that means if I have that brand in my card, that network logo in my card, I can use it for my purchase. So what are the primary steps and what are the primary fundamentals of the payment system? So let us start with the merchant. The merchant is a payee here who will receive the payment, and the merchant has the ability to accept the payment through an online payment system or a hardware like POS device. But for getting that POS device or the ability to receive the payment, the merchant has to have an bank, and that bank here is the intermediary. So the merchant's account is at, say, ICICI Bank. So the ICICI Bank will be the acquirer in this case, where all the transactions that payee receives will be ultimately paid by ICICI Bank, and that is why ICICI Bank will be the acquirer in this case. Let us come to the customer side now. So suppose I am the payer and I want to purchase something, and once my purchase is complete, I want to pay. So suppose I want to pay through my credit card or my UPI. So uh, the credit card that I hold or the debit card that I hold has a bank name on it. So that bank has issued me the card, and that is why that bank is called the issuer. So, for example, let us say that I'm holding an HDFC Bank credit card. So, in my case, the card has been issued by HDFC card, and here in this example, HDFC Bank is the issuer. Now, on the card itself, there will be a logo of either Mastercard or Visa or Amex and some others. So, what they do is that they do the work of the network, and they connect the transactions between the issuer and the acquirer. So I just walk into a merchant store, I do my purchase, I pay through my HDFC Bank credit card. It is acquired by, say, ICICI Bank, and the payment goes to the merchant at the end of the day. But there are many steps that takes place within uh, the in the background. But the customer, the payer and the payee doesn't care about that because the technology is so advanced. And what we see that whenever I or someone uses the credit card, I get the authorization within, say, 2 seconds, 2 to 3 seconds. And similarly, the merchant collects all those authorization slips and then submits to the bank and gets paid next day. So that is why the convenience is between the merchant and the consumer. But there are a lot of steps and lot of technology involved that follows all the rules and the standards, as well as helps to uh, get fraud checks, like whether the card has been really been used by whether it is a stolen card or if the merchant is fake. So all these checks are done at the network level, and this is called an open loop. But if we have a closed loop, then it can be like, say, a merchant store issued me a card, and I can use that card only at that merchant store. So that is why it is a closed loop. So now we know about the merchant, acquirer, payment network, issuer, and the consumer. And let us see what is the business objective of each these groups. Why do they provide the support? And for that, let us use an example that suppose I'm trying to buy a product which is of 100 rupees. Okay. So I want to spend 100 rupees, and I pay 100 rupees to the merchant through my card. But what actually happens is that the issuer deducts 1.84 to cover the cost of fund and risk. Okay. So this money goes to the issuer. Then there is a network which takes 0.09 out of that and collects it from the acquirer. So that way, when the payment actually reaches to the merchant, out of this 100, the merchant receives only 98. And this is the convenience or the assessment fee paid to the network for using the network infrastructure. So I pay 100, merchant gets 98, but in between, the issuer bank makes 1.75, the network makes 0.18, and the acquirer makes 0.07. And this is just for an example, and I've not used the recent data, so that if somebody wants to know, they can send us an inquiry or write something on our comment. I will reply to that or give you the present structure. So these figures are just looks very small, but now multiply it with billions and billions of transactions happening per day, and we know how much is the total revenue that an issuer or an acquirer or the network can get over a period of time. So for this example, say I've used like the assessment fee 0.06%, acquirer charges is 0.2%, issuer charges 1.8%, average purchase amount if it is $50, and total if there is 2 million transactions in a month, then the acquirer makes 0.14 million, the network makes 0.12 million, and the merchant makes 98 million. So this is the convenience, and this is the fundamentals. Now there are many other stakeholders that get involved. So there are card manufacturers, we heard about payment gateways, underwriters, bank, processor, device manufacturer. Everybody have their own roles, and everybody gets a part of the interchange fee funds and this business. And new stakeholders are constantly emerging, and every day there is some improvement, like we have heard about virtual currencies now being getting more attention. So they are the various business opportunities that a company can make. There are various opportunities in getting job in these companies by learning these technologies. So if we want to learn, or if somebody has any interest in this business, so we can help. So contact us or if somebody wants to learn about technologies that are used for creating this value, so get trained with us and we'll be happy to support. Thank you.